So if we were in normal times, would there have been a housing crash? That's the big debate that we're having right now because we haven't seen it. Where'd it go? What's causing housing stability? And that's really a conundrum that we're facing today. So that's our video topic for today. Here's what prompted this video. I was walking around my neighborhood, and my wife and I, we walk around our neighborhood all the time to get our exercise because we're old people. And I noticed something. I really started paying attention to how many houses are up for sale because one of my neighbors just put their house up for sale, and I was really nervous. I'm like, it's kind of a mid to upper class neighborhood. And I'm thinking, man, this is a price range that might be really suffering right now. That house sold within 2 weeks. Okay. And they got pretty much almost asking price for it. So as we're walking around, I see 2 total houses for sale. Usually every block has a house for sale or 2. So I'm thinking, well, okay, this is to solidify a lot of existing houses aren't going on the market. No matter what all the analysis puts us at, it really hit home when I was walking around my neighborhood this weekend. So that's what I want to put into context. Why aren't the housing prices crashing? Because if you just take a back seat on this and just think of it in just common sense terms, if housing prices and affordability because of rates if you would have basically laid out this whole plan for me and said, Dan, rates are going to go from 2.9 to 7%. The first thing I would say is, man, we're in for a rude awakening. But then what we started seeing is, housing market didn't crash. So we keep trying to analyze what's going on in the economy because a lot of people are saying it's going to crash. And we're on stage 7 of a 12-part series that when I ask them, I'm like, well, where are you getting your context on to tell us, what stage we're on and so forth? But nobody ever replies to me. They're just like, we're on stage 6 now. Well, what are you using as context? Are you using 2008, which the subprime market really took over and crashed that market? Are you thinking other times in the market that house prices went down? What is your analysis of this? And nobody ever really has a good answer. They're like, well, foreclosures are going to run rampant because we're seeing those up 500% and all this other stuff. So that's what I want to put into context today. So it might be a little bit longer video. I apologize for that, but I bet you you're going to learn something today. So the first thing we want to break down is really look over here is rents are falling in America for the first time in years. Well, if you look back and you really look at this data, rents started turning about July of 2022. So this article is kind of, let's just take it with a grain of salt. So we see that house rents are going down. Okay, but let's just look at what happened over the last year or two. So if you really break down this analysis, this is the shocking information that a lot of people really don't really pay attention to. Your rents went up, but a lot of people are saying, well, it went up a little bit or went up this. If you go down through here, rents have gradually come down from the July 22 peak of $1,777, but remain nearly 25% higher than where they were in 2019. So let's amuse me on this one. If you owned a house in 2019, how much would your house payment have gone up? Would it have gone up 25%? No. Some people are going to say, well, your homeowner's insurance, they're skyrocketing. Your real estate taxes are going out the roof. Well, by no means is it going to go up 25%. Okay, so if you were in the market or you bought a house in 2019 or earlier, you were in a catbird seat. But then you sat on the fence and a lot of people said, okay, this housing crash is going to occur. So you sat on the fence and you kind of paid attention to that. I was also kind of thinking, okay, when rates really, really spike, what are we going to see in the housing market? Okay, but what we didn't really understand at that point, and a lot of people still don't understand, is inventory. Inventory is a huge piece of this puzzle. What you have in inventory comes from this. You have existing home sales. These are people that are living in a house now. They put their house up for sale because they want to buy a bigger house or a smaller house or whatever. So you have that group of people. Then you have foreclosures, and I hate to say it, it's part of the equation of this. You have people going into foreclosure, losing their homes, and then people pick up those homes. So you have new homes there, and then you have the new construction. So let's pick up these pieces of the puzzle. In the new construction piece, they basically came in and said, guys, we got to stop building houses because mortgage rates are going to spike to 7%. Nobody's going to want new houses. So we can't build anymore because there's not going to be any demand for that. So that kind of pulled down inventory. And then you had a ton of people, millions of people sitting on interest rates of about 3 or 4%. And then when rates went to 7, it was like, well, I'm not going to downsize because even if I downsize, my payment's going to go up. I can't upsize now because if I upsize, my house payment's going to double. Well, heck, I'm just going to stay put. So they stayed put. And then on the other side of the equation, we had foreclosures. Foreclosures, which are a normal part of the market. There was a foreclosure moratorium, so those weren't coming to market either. So that's why you have the houses sticking at the prices they are now. So let's reanalyze this though. So we have house prices on the rent side starting to cool down, which is fantastic for those out there with home buying. But then let's look at the past due number of people that maybe the foreclosures are coming to the market, because we know and I'm going to show you here in a second, we're building inventory is ramping up, but it's going to take a year or two to get to that piece. Okay, so how about the past due or foreclosures? Well, past due mortgages approached record lows as serious delinquencies continue to improve. Prepayments sees seasonal rise. Okay, so you're thinking, okay, because you still see a lot of people saying, well, foreclosures, they're up 300% from where we were last year. Well, maybe they are, but if you're at a moratorium where you can't really foreclose on anybody, so you might have 1 or 2 sneak through, then you have 3 or 4. That's a 300% increase or a 400% increase. So let's kind of just break down the captions of this article, and I'll put the article down below so you can analyze it as well. But if we go through this caption, the first thing you're going to see here is reversing much of April's calendar-driven spike. The national delinquency rate fell 11 basis points in May to hit 3.1%, the lowest it's been other than March of 2023. So it's the lowest in history. Okay, so is it starting to grow? Number of borrowers in single payments improved. So the single payment people that are behind are better off right now. Serious delinquencies fell by 3.7%. So those are getting worked out. Foreclosures started at 5.1 serious delinquencies in May, up only marginally and still more than a full percent below where we were in 2022. I'll stop there. So you see caption after caption after caption. What's happening is you're seeing banks, they learned from 2008. They learned that we can't don't take the person's house from them unless there's a way to work out something. If you can work out something, everybody wins. The bank wins because you're going to continue to make payments. The homeowner wins because you have a house to stay in, doesn't have to be foreclosed on. And unfortunately, home buyers are the ones suffering right now. So you have existing home sales pretty much stagnant. You have foreclosures at the lowest levels in history, so we need builders. We need builders to come back in the market, and that's going to be, unfortunately, our only saving grace. Now, let's get over to the economic calendar for this week. This also plays a role in home affordability. We want to track and see what the economy's doing, what the Federal Reserve is going to do. Are they going to keep increasing rates to make housing more unaffordable, or are they going to stagnate? What are they going to do? There's rumors all over the place that they're raising rates 2 more times. Only time's going to tell on that. So let's look at the economic calendar for this week to see if there's anything in the tea leaves that we can really dissect and pay attention to. So today we have Monday, no economic events. So we start all the data coming in on Tuesday. So on Tuesday we have building permits. This is going to be a big number because we need to see how much, like I just said, how much inventory is hitting market. If this share starts going down, which I don't think it's going to be, if it starts going down, it's going to put more pressure on housing not to drop in values. Okay, you guys are sitting on the sidelines saying we need a housing market to cool down, which I agree, but we need rates to come down and we need house prices to stagnate. How do you do that? We need more supply in the market. Econ 101, supply demand. Okay, I'll leave it at that. So the economic calendar we go through, building permits are coming out tomorrow. Core durable goods, how healthy is our manufacturing economy? How healthy is our economy? You're going to start seeing this ticking down and down and down. Consumer confidence, it was up last reading. I don't know how, but we'll continue to monitor this because this helps us. I want consumer confidence to actually come down a little bit. The reason why is we need to start fearing our paychecks a little bit. And the basis behind that is we need to start driving down prices. People are still spending and spending and spending. The M2 money supply is retracting at a record pace, but it's still at record levels. Okay, so if you're new to all this, please join my channel, click the thumbs up button and subscribe so you can learn about this on a daily basis. And then we have new home sales. These are new constructed homes. We're going to pay attention to this as well. And then Wednesday starts the Armageddon. You have Federal Chairman Powell speaking. He's going to say something that either the markets are really going to like or they're not going to like at all. So this could be a huge volatile day. And then on Thursday, he continues to talk. But Thursday is really when this substance starts to come in. We have GDP coming in, initial jobless claims, so the jobs market, pending home sales. And then on Friday, we see the PCE, the main number. The one inflation number that the Federal Reserve gives the most weight to is the PCE. And that inflation number we're going to sit here and watch on a very meticulous basis, I'll put it that way. So what's all this news having to do with the mortgage rates right now? So what you're seeing on your screen is what I see on a daily basis. You're going to see the bond markets for the 10-year Treasury, and then we're going to see something called the MBS. What is the MBS bond? Well, it's a mortgage-backed security bond that trades on Wall Street. That's yield is the biggest part of your mortgage rate. Okay, so all you need to know on this is here's the price of the bond. What is the price doing? So right now we have an up 3 tick. Up 3 is really not going to do anything. But what we like is when the price of a bond goes up, the yield or the rate goes down. So we like when the price goes up. You don't see much of a price up lately, but that's what's going on in that segment right now. The headlines right now for those out there that are saying, hey, why can't we stop investors from buying? Well, Florida's starting to do that right now, and I'm going to dive into that in a couple episodes going further, because don't think that, Florida makes it illegal for some foreigners to buy real estate. It's not as cracked up as it sounds like, makes good headlines, but there's not that much substance there. So what's going on with mortgage rates right now? Well, this is where we closed on Friday. These are the rates posted by Mortgage News Daily on a daily basis. If you want to see their chart, all you have to do is the link is down below. You're seeing the rates are just teetering at 7%. So what's going to happen this week? Well, based on all the information that we get, we're going to monitor this thing because it could go all over the board, folks. If you're looking out there and you're like, hey, I want to see if I can get pre-qualified for a home. Maybe I'm sitting on a ton of equity and it's like, should I pay off some high interest rate credit cards? What really should I do? Well, if you want to kick those ideas past a mortgage advisor, I would highly suggest you visit our website. It's therateupdate.com. There's multiple ways you can reach out to us for assistance. So if you're out there saying, can I buy a house? How much can I qualify for? What would that payment look like? All you need to do is do one of 3 things. 1, give us a phone call, 844-775-5626. We'll answer any questions that you have. Or you're like, Dan, I just want to apply, and then I'll work with you guys to see how much I can qualify for. Well, do me a favor. Just click the Apply Now button. It's right over there. Or if you're out there and you're like, I got a bunch of questions, and I'm really not comfortable, doing all this, and it's by the time I get home, you guys are closed, so what can I do? Well, we have a consultation button down below. All you have to do is click that, and you'll have a consultation set up with me or one of my mortgage advisors. So thanks for watching, guys. If you have any questions, please list them down below. I try to go through all my comments on a daily basis and answer them when I do have some time. So please put any comments that you have down below, and I'll make sure I answer those on a timely basis. Thanks again for watching. Don't forget, give us a thumbs up and subscribe so you can learn more about real estate and the housing market and the economics behind it all. Thanks for watching. See you tomorrow. Bye-bye.